Greetings from the Charter School Office. I'm Albert Bertram, the Finance Specialist for the office. So this sheet is a review of the audited financial statements. It essentially takes the large audit and summarizes it into 4 pages. We use this in our office as a form of communication between myself and others in the office. It is also a pretty good tool to compare things from year to year, so it's much easier to look at 4 sheets side by side than the big audit side by side. So with that, we'll get into the sheet. We'll start in the statement of net position right here. To show you that these are from the audit, we will look at total assets. Total assets are $3,698,611. So if we go to the audit, we'll see our statement of net position right here, and there's our $3,698,611 for our total assets. So these numbers on the audit are directly input into this sheet right here. So when we get down to ending net position, the ending net position is the June 30th, 2014 numbers. So the previous net position is the June 30th, 2013 net position. So this just lets you compare quickly from year to year. There was a decline in net position from June 2013 to June 30th, 2013, to June 30th, 2014. So as we move down, this is the balance sheet section, the general fund current assets. So this is the list of all of them, cash, etc. As we look over here, these are our balance sheet general fund classifications. So again, we'll go back to the audit to show you where these are from. 2 pages after the statement of net position, that's where the balance sheet is. So 1, 2, there's where it says balance sheet. Now for this section of our sheet, we need to take in consideration that this is a general fund, so you need to look at the general fund column. So there is the debt service and usually a school service fund or like a food service fund or something like that. But this particular area is just looking at this column, so that's where that number is derived. These numbers are derived from for our assets, and then down here is where our fund classifications are. So we have non-spendable, prepaid, which I'll show you that matches up, and then unassigned. So we'll go back to our sheet. And we'll start over here. Here's our cash and stuff. So here's that prepaid. So here's prepaid is a current asset, prepaid items. So we'll go back over to our fund classifications, and we'll see that prepaid is in the non-spendable section as well. So non-spendable amounts are amounts that cannot be spent because they're either not in spendable form or are legally or contractually required to remain intact. So these other ones aren't included in the June 30th, 2014 audit, so I won't go over them. The definitions are in the actual audit if you're interested in knowing what they are. Unassigned fund balance is amounts that are available for any purpose. These amounts are reported only in the general fund. So there's the unassigned amount, the non-spendable amount, and then the total. So that's just a quick way to look at the balance sheet, general fund items. Now as we move up before we go down, you'll see this up in the upper right hand corner. This is a quick snapshot of the activity during the year. So we have our beginning fund balance, revenues, expenditures, other financing sources, net change in fund balance, and ending general fund balance. So as we move down here, this is where the calculations are done on these numbers. So general fund divided by revenues is the ending general fund balance divided by total revenues. This is general fund minus restricted amount. Same calculation essentially, except if there was a restricted amount down here, it would subtract that first. So that's why these are the same. General fund divided by expenditures takes the ending general fund, divides by total expenditures. Then ending general fund divided by beginning general fund takes this and divides it by this. Now if that is below 100%, there was a negative net change, which we have for this year, which is why this is below 100%. If it was a positive net change, it would be above 100%. So these are just some numbers to help you track things from year to year. The higher this is, the more fund balance you have available, which is a good indicator. So if it's trending upward, that's a good thing. As we move down, this is the notes section of the audit summarized into numeric tables. So notes payable for other schools, there is nothing for Bay County. For other schools, it would be associated with a short-term borrowing, a state aid note, or any other type of short-term borrowing. This section is the long-term debt. So this is the bond for the school. This is just the principal amount that came out right here. So this is the bond for the building. There is no capital operating lease that is associated with if another school utilizes a lease to finance their building. And then over here is the management company fees. So this is the fee section. This is all directly derived from the notes, which I'll show you. It's on page 4 of this sheet. This percentage is not the contract percentage. What it is it takes the management fees and then divides it by the total state aid on the next page. So that's what that is. And then this is earned divided by fall 2013, takes the management fees and divides it by the fall 2013 count, which is the corresponding count for this fiscal year. Below that we have our total square footage. So if this is incorrect, let us know. Hopefully it's accurate, because we use this for a couple calculations. Over here we have revenues per square foot, which takes the total revenues and divides it by square footage. Expenses per square foot, and then the difference. So if there's some vast difference between these are here to get your thought-provoking mind moving and try to figure out what's going on. And then this is just the difference. Now, payment per square foot is different from these, in that this takes the principal and interest payments on the bond for the current year and then divides that by the square footage. So that's a way for, with the other schools that use leasing, I take their total lease payment and divide that by the square footage. So it's a means of comparing things. And that may change slightly as your bond payments change, but that's just how it's calculated right now. So over here we have operations and maintenance per square foot, which takes the line item again on the next page. Down here, operations and maintenance, and then divides that by the total square footage. So that's where that number is derived from. And then square footage divided by fall 2013 takes the total square footage and divides it by the fall count that corresponds with this fiscal year again. So moving into page 2, just the general fund comparison. This is the June 30th, 2014 numbers, June 30th, 2013 numbers, then the difference. So what this essentially does is it lets you look at the 2 years side by side and compare much easier than trying to look at the 2 audit sheets side by side. So this just simplifies everything. So you could look at an individual line item and say, why did the state aid go down, that kind of thing. So as we move down, these again are the revenues, these are the expenditures, and then I separated the instruction from the support services, and then there's a couple other ones that aren't in the support services, but they're still down there. So if we wanted to know what these are, and I've had questions on these numbers here, these are accounting codes. So if you wanted to know what this is, I'll show you an example of a quick way to figure it out. So I took the accounting manual, put it in Microsoft Word. What you do is you come up, you push find, you come over to the side, you type in what you're looking for. We'll use basic programs as an example. Make sure you're on results, and then this will highlight that item throughout the sheet. So if you want to know what it was, find where the definition is. Here's the definition. Here's the accounting code. And then basic programs are instructional activities, including enrichment, designed primarily to prepare pupils for activities as citizens, family members, and workers, as contrasted with programs designed to improve or overcome physical, mental, social, and or emotional handicaps. And then it goes on to say it includes pre-kindergarten, elementary, middle school, etc. But if you're interested in knowing what one of these line items are, I'll go back to the sheet. If you're interested in knowing what something is, whether it be revenues or expenditures, it's pretty quick to find that answer. So you can know what everything is and what it's classified as and what's supposed to be included in that. So it's just good to know what everything is. As we move down, again, June 30, 2013, June 30, 2014, this ending general fund balance should match up to the box in the upper right-hand corner of page 1, that quick snapshot of the activity that we went over. As we move down, we'll see the budgetary comparison. So this is the original budget, final budget, and then the actual. This takes the difference between the actual and the final, and then this does a percent change calculation between the actual and the final. So if you notice, I have this note here. This just specifies that the original budget is due July 1, which is well before the fall 2013 count. So the budget is usually subject to change in many of our schools. So that's just a reminder to myself and others in the office that is likely to happen, that the budget is likely to change due for that reason. But it's still important to follow the law and turn the budget in on time. So below that, we have instruction percent of revenue. So that takes the total instruction costs and divides it by the total revenues, which I'll show you what that is. We'll move back up. So here's total instruction divided by total revenues. That's all it is, and then it puts in a percentage form. If you notice, this has trended upward for Bay County, so 50, 55, and 56. So we'll go back up to talk about this 50. 50 is from, I had to do that from just looking at the previous audit. It's not reflected on the sheet, but these two are reflected on the sheet. So if we go back up, we can look, why did this increase happen? So there was actually a decrease in revenues, and there was actually a decrease in instruction expenditures. However, the decrease in instruction was less than the decrease in total revenues received, therefore that ratio went up. So it's important to understand the relationship. That those calculations are just meant to spur on thought again and try to help figure out what is going on. It's just a way to analyze things. It's not meant to be the end all. Another example is if a teacher resigns that's getting paid $50,000 and a new teacher comes in that's only getting paid $30,000, that's going to lower the total instruction expenditures, but not necessarily be a decline in services provided, as there's a new teacher filling for that teacher that resigned or retired or whatever. So that's just important to understand. These numbers are meant to be indicators to help ask questions, so that's what that is. As we move over here, this is total revenues divided by the fall 2013 count. These are just another calculation to look at. So as this sheet comes out from year to year, it'd be good to look at this calculation from year to year and see how this has changed. So revenues, expenditures. Another thing to consider about expenditures is if there's a large capital outlay during a particular year for whatever reason, that could skew the expenditures number. So it's important to know why things are happening. So these are meant to be indicators to try to show you why something happened or why these numbers skewed. So and then the difference. So that's that. As we move down, this is our enrollment sheet, which is page 3. These numbers that I highlighted are directly derived from CEPI. So I don't like using acronyms without showing what they are. So CEPI stands for Center for Educational Performance and Information. So if you're looking for this information, you go down to My School Data, and then you go through the filters of the things they have you fill out, and then you can pick student count. Here's the next area is free and reduced lunch count, and then special education count. So these are large spreadsheets with all the schools in the state, and there's a lot of data. So I dug that data out for you, and that's what this is. Now if you notice I didn't highlight the last one. The last one is actually the number I received via Epicenter, which is the file collection program we have between the school and the charter school office. So I received the DS 4061 sheet, and that number is an unaudited number, so that is subject to change. So if these aren't accurate, what you think, these are from CEPI. This one is that DS 4061, and I did notice with another school that the CEPI numbers weren't the same numbers that were on the state aid sheet due to the teachers being utilized for parochial students. So if that's the case, that's why these numbers are different. So again, I just got these from CEPI. I've done that for all the schools, so there were slight differences for some schools relating to that. So if you look at these and say, well, our state aid sheet says it's higher, that's what's going on. So that's why this number is potentially may look higher than these other ones too. So take that into consideration. I didn't want to come back and alter all these numbers on all my sheets, so I kept the CEPI numbers, but that's potentially why this number may decline next year when this number is updated for that reason. So it's important to understand what's going on with that. So over here, this takes a percent change. So this is the percent change from count to count, so spring to fall, fall to spring. So this is for the numbers people who like to see the numbers displayed. Again, this 22% increase, if there's parochial students that are counted on the state aid sheet, that may be inaccurate. That's something that we're going to follow up with between CEPI and the state and try to figure out what exactly is going on. So this is the only school that has that. So as we scroll down, we'll see our enrollment trend visually for those who are visual people. So that's what that is. Pretty self-explanatory. Very good visual display. As we move down, this is the free and reduced lunch count from CEPI again. Same page, just change the filter for free and reduced lunch. And then over here is the percent free and reduced lunch. So this takes this count, divides it by the total fall count, and then that's where these percentages are derived from. And then below that we have our visual display of the count data. So that's the enrollment. So as we move into page 4, this is the the notes section of the sheet. So this takes the notes and summarizes it into I summarized it into those boxes on page 1. This is where this is derived from, and this is from the audit again. So this is a page number. This is the debt section. So this deals with the long-term debt, the bond, and page 19. So if you want to look up the actual information, page 19 of the audit. Down here is the management company information. So here's the management fees that was used in those calculations on page 1, and this is derived from page 20 of the audit. There was no findings. There's a couple other information that I thought was important to note from the audit, page 4B. And then this is actually something I wrote, the payment per square foot calculation. That just explains where that calculation that I talked about on page 1 is derived from. So the long-term debt, you won't find the current year's payment expressly stated in this year's audit, but if you look in last year's audit, you'll see the table of the principal and interest payments for the coming year. So that's where I went back and looked at that and got those calculations for that calculation, those numbers for that calculation, excuse me. So this document's reviewed. My contact information is albertb@bmcc.edu. If you have any questions or comments, let us know. We thought this video would be better than trying to have those regional board trainings and it's specific to your school, so hopefully you got some benefit out of it. Thanks for all you do for the children of Michigan. Have a good one, take care, and stay warm.